It's official. Zillow is ending their iBuying program, and with that, I went ahead and sold all of my position this morning at open. I just have one thing to say to management at Zillow. You could have sent me lube first. You know what I mean. Now, you may be asking, why would I sell the stock after this news has come out and the stock has gotten hammered? Isn't this priced in? It can't get really worse than this, right? Oh, it can get worse. And I took the time last night to go over the financials, change my projections based on this news. In this video, I'll be going over that, as well as some tips for newer investors about holding onto stocks when things change and how that can lead to some bad situations. If you're wondering what iBuying is because you didn't see my last video on Zillow and why I was buying it, it is essentially a company that uses data and algorithms to come up with a price offer for real estate with not necessarily even seeing the property. Someone wants to sell their house, they go to a website, they see an offer, click a button, and boom, they're selling their house for $400,000. This is part of the video where I click the That Was Easy button. Zillow got into this business back in 2019 when they started Zillow Offers. There were signs that something was going on with Zillow back on October 18th when they announced that they were stopping their buying of Zillow Offers or buying new homes to add to their inventory, and the stock went down to 85. But there was never an announcement about them completely exiting the iBuying service. And then I see articles flying out there saying that Zillow is selling 7,000 homes a day ago for around $2.8 billion. And this gets me thinking. I mean, the company had 3,142 homes in their inventory at the end of Q2. So in order to sell 7,000 homes, they had to have bought a ton of homes in Q3 and not really sell any. Either those articles are complete BS or Zillow is ending their iBuying program. In my head, I was hoping that the articles were BS because the iBuying program was a big piece of why I even bought the company to start with. I said to myself, before I make any drastic decisions, I'll just wait for the earnings call and they should clear this all up. And oh, did they clear it up for me. They are winding down Zillow Offers, and then they're also trying to lay off around 25% of their workforce over the next few quarters. Bruh. I mean, in their Q2 report just 3 months ago, they're talking about strengthening their pricing models for the home segment. They're talking about continuing to be a housing market maker with Zillow Offers. There is no sign that they're stopping iBuying. I honestly feel blindsided by management because they made things seem hunky-dory, or they're fine-tuning the whole iBuying segment, and this was still a future growth engine for the company. Well, they were lying through their teeth because everything seemed to have fallen apart in Q3, and at this point in Q3 they were selling a home for about an $80,000 loss on average. Don't get me wrong, I know that it's difficult to let investors know that they're exiting a certain side of their business, and there's really no easy way to do it, but it sounds like their algorithm and pricing data isn't the best for predicting short-term moves in the pricing, because they basically call out that their forecasting just sucks, and looking at a larger scale and continuing to build this up may lead to a huge issue down the road if they continue to just blindly buy these houses and deal with these pricing swings. Now, on the good news, their core business, the internet, media, and technology segment, aka advertising, is doing well. They still have the mortgage segment within the business that they're growing. Those two pieces are still doing well for the company. Some investors might look at this and say they're getting rid of the business that's losing them money, negative gross profit, and they're moving to their more profitable business to focus on that. What's the big issue? The answer is growth. And growth was a big part of investing in this company because iBuying was supposed to be the revenue generator for years to come. We're talking about expected growth rates of close to 50% for revenue over the next 5 years on a compounded annual growth rate basis. That's an extremely high number. And for the first 9 months of operations, Zillow Offers was around 63% of the revenue. By ending the iBuying program, they're giving up on this side of the business and they're going to lose all this revenue. Well, yes, they did have some negative gross profit, and that's not sustainable if you continue to run the business at negative profits. But the promise was to get this to be a low margin business. So they were supposed to be making money on this revenue down the line. That's why they got rid of it. They don't see the ability to get this under control. So they're just getting rid of this, which means left over is the IMT segment as well as mortgages. You can see this is only around 1.6 billion for 9 months. When I did my analysis a couple months ago, I had lower operating margins for this company, but really high revenue growth rates. And that's because of the iBuying and the plan to become a $20 billion business in revenue by 2025. And with all this information, I came up with around $96 as projected fair value for the company. With the business model shifting from high growth, low margins to low growth, higher margins, I come up with a much different number now with a fair value around $67. But this is also giving a very generous 20% growth rate for the current business. That may be a little high, so this number may also be slightly high. And then if I look at just taking something like a price to sales ratio of 6 multiplied by the 2022 revenue, which would take out that iBuying business, we're talking about a share price projected for around $60 a year from now. With that information and the assumptions that I built in, I decided that I was going to sell my entire position because when I invested in the company, it was a different thesis. iBuying was part of the business. It was a high growth company with smaller margins, and that's what I factored in. Now that they're getting rid of that, I'm out. Here you can see my transactions where I'm selling it this morning at open around 75 bucks. My average in this position was around 94. So we took a loss in here. Luckily, the stock was in a massive position within the portfolio, right around 1.5%. We take a little hit, but I think a big takeaway for newer investors is this whole mentality of I don't want to take a loss. I'm just going to hold on to the stock instead and hope that it recovers. What I've learned over time is it's better just to cut those losers when your thesis changed, and that's exactly what happened. Now I can take that cash and move it into an investment that I think will do better over the next couple of years. Of course, that's my own opinion and my thoughts on the stock. Definitely leave a comment below on your own thoughts and whether or not you think Zillow is dead now or this is an opportunity to add to a position. If you guys did enjoy the video, make sure to hit that like button as well as consider subscribing to Main Street Wolf, where we talk stocks, investing, anything to do with money. Thanks guys for watching and have a great day.